a prominent figure in the cryptocurrency venture capital space, has made a bold accusation against the LAB token, calling it a laughably obvious scam, and suggesting that major exchanges are complicit in its manipulation. Simon Dedek, the founder of Moonrock Capital, has publicly stated that the price chart of LAB reveals clear signs of artificial inflation orchestrated by market makers. According to Dedek, the token's value is being pumped to attract retail investors, who then face liquidity extraction once the scheme unwinds. This kind of manipulation, he argues, would be prohibitively expensive without fee-exempt accounts and direct cooperation from the exchanges themselves. Dedek specifically named exchanges like Gate.io, KuCoin, and BitGet, accusing them of enabling the behavior for short-term profit. Despite these allegations, the price of LAB has surged recently. According to CoinGecko, its fully diluted valuation, FDV, rose from $8.6 billion to $10.5 billion in just a few days. This places LAB as the 12th largest cryptocurrency by FDV, a valuation that most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Now rivals that of major corporations like South Korean construction, giant Hyundai E&C, the comparison highlights the extraordinary valuation assigned to a token facing serious fraud accusations. Dedek's comments have reignited concerns about the role of trading platforms in policing dubious token listings. The allegations suggest that fee-exempt accounts and direct exchange cooperation are necessary to execute such a coordinated manipulation. This raises questions about the oversight and transparency of listings on major exchanges, the involvement of well-known platforms like Gate.io, KuCoin, and BitGet adds weight to the concerns, as it implies that the manipulation is not isolated, but rather systemic. Dedek's statements also point to the broader issue of liquidity extraction, where investors are drawn in during a price surge, only to find themselves unable to exit at a profit. The accusations suggest a deliberate strategy to attract retail investors and then extract value from them. The implications of these allegations extend beyond the LAB token itself. If true, they highlight a systemic issue in the crypto market where exchanges may prioritize short-term profits over investor protection. The fact that the FDV of LAB has grown to rival that of a major corporation raises questions about how such a token could reach such a valuation while facing serious fraud accusations. The situation also underscores the risks for retail investors who may be unaware of the potential for liquidity extraction and market manipulation. The next signal to watch is whether any of the exchanges mentioned will. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Respond to these allegations. A formal statement or regulatory inquiry could provide further clarity on the validity of Dedek's claims. Additionally, the continued performance of the LAB token will be important to monitor, as it may indicate whether the price surge is sustainable or if it is indeed a result of artificial manipulation. The broader market will also be watching to see if other tokens face similar scrutiny, as this could signal a shift in how exchanges and investors approach new listings.